Hey everyone, we got some big news for Fisker stock investors today that sent the stock price down as much as 12% when the news came out. The stock has since recovered. It's down about 6% as of this recording. So in this video, I'm going to go over what that news item was that sent the stock price down, whether or not that decrease was justified or if it was an overreaction from the stock market, and what it could mean for Fisker stock investors longer term. So let's get into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the news item that came out that sent the stock price down was that the National Highway Traffic Safety Administration, NHTSA, Office of Defects and Investigation, issued a notice that it's probing Fisker's Ocean SUV for loss of braking performance. The agency is focusing on 9 complaints that have been issued, including one incident involving a crash and an unspecified injury. Fisker declined to comment on this news. So, safety issues from Fisker coming out, sending the stock price down. Of course, Fisker is just now recently producing and delivering vehicles only in the last quarter, and so it's a little bit alarming that they've started already on the wrong foot. Since hitting the roads, owners have lodged 19 complaints with an HTSA on issues ranging from brake loss, problems with the gear shifter, to a driver door failing to open from the interior, and 2 instances of the vehicle's hood suddenly flying open on the highway. So in a few short months of people actually owning and driving Fisker's cars, there's already all of these issues and a complaint with the NHTSA. So not good news, not good news at all for Fisker stock investors. And you can see the stock price was down 6.42% as of this recording, but it was down as much as 10% pre-market when this news came out. So investors sending this stock price down on the news. Now, I will say I don't think this is an overreaction from the market, and I'll tell you why I think that's the case. If this news was in isolation and Fisker was doing everything else right, then I think this would have been an overreaction. However, Fisker over the last few months has had a range of issues execution wise, from not having its delivery logistics in place to deliver the cars that people have ordered, to decreasing production targets by several fold, and on it goes for Fisker over the last few months. And the change in business model from going direct to consumer to now having to go through dealerships, and it just adds up for Fisker stock investors, where they keep saying, you keep disappointing us and you keep telling us that you were going to do a certain thing. You're not able to achieve that. You're achieving that with much delay, with lower profit prospects, and all of these issues are adding up. And so it's the fact that the cumulative execution inability is what's causing the stock price to go down as much as it is today, because it's right now, as of right now, the NHTSA is saying this is so far the agency has classified this as a preliminary evaluation. So it's in the second stage. It's not a defect petition, it's a preliminary evaluation. It could lead up to an recall inquiry or engineering analysis. So we'll see where this ends up. If this ends up being a recall having to be issued for Fisker's Oceans, that could be a much bigger expense for the company, which could lead to even more losses and the stock price falling even more. But for now, this is just a preliminary evaluation. So not quite certain yet how much this is going to cost the company, but investors going ahead and playing it safe and just selling the stock and saying, you know what, Fisker has disappointed us enough already. Let's sell the stock before it gets even worse. However, all that being said, it feels like Fisker has taken so much of a beating already. It feels like this might be overdone. If you look at it's down 6.4% today, but if we zoom out, in the last month, it's down 40%. In the last 3 months, the stock price is down a whopping 84%. And if we zoom out more, 6 months, it's still 84%. If we go out longer, the stock price is down 93.6% off the high. So at some point, you begin to question and say, is this too much? Is this a point where now it's like, okay, we can buy Fisker stock because so much has already been taken out of the price that now it's value to go in there and buy it? Well, if you look at the valuation, the forward price to sales ratio, Fisker is trading at a forward price to sales of 0.085. But let's look at what the forward price to sales ratio means. The price to sales ratio measures what you are getting for the price you are paying in terms of sales. So what are you getting for every dollar in sales that you're paying? For example, in this first example, the market capitalization is $1.25 billion, and the sales for the previous 12 months were $185 million. That means you're paying a price to sales of 6.76. Similarly, if you look at the expected next year revenue, you would be paying $1.25 billion for $465 million in revenue expected, and that would mean the forward price to sales ratio is 2.69. The factors that influence the price to sales ratio include profitability. Of course, you would be willing to pay a higher price for a company that generates higher profits. That means $100 in sales will turn into $20 in net income for a company that has a 20% net profit margin. That same $100 in sales will only turn into $5 in net income for a company that has a 5% net profit margin. So companies with higher net profit margins tend to sell for higher price to sales ratios, all else being equal. Another thing that influences the price to sales ratio are growth rate expectations. All else being equal, companies that are expected to grow at a faster rate sell for higher price to sales ratios. Similarly, higher total addressable market opportunities tend to result in higher price to sales ratio because investors see this company being able to grow for a longer period of time before hitting the ceiling. And finally, cyclicality. Companies that are more stable and less cyclical tend to sell for a higher price to sales ratio because cyclical companies are seen as being more risky. Companies like McDonald's are seen as being non-cyclical. McDonald's does relatively well whether the economy is booming or whether the economy is in recession. And so investors would be willing to pay higher price to sales ratios for companies that are less cyclical. Investors use the price to sales ratio when a company has negative earnings, unstable earnings that fluctuate between positive and negative, and also the same for cash flow. If a company has negative cash flow or cash flow that's fluctuating from positive to negative, the price to free cash flow and price to earnings ratio are less informative, so analysts use the price to sales ratio. That being said, we can understand the importance of Fisker's price to sales ratio, and we start to consider this might start looking attractive value-wise if Fisker can execute. If we start to see some evidence of Fisker doing a couple of things right, doing 2 or 3, 4 things right, then and the value stays the same, then I would say it's starting to be time to consider adding the stock. But as of right now, it's getting too many things wrong in a row. I would wait to see Fisker just get a few things right. Just go through a 3-month period where you just execute on the plans, you increase production, you deliver the vehicles, and you just fulfill your plans. That's what Fisker needs right now. Just a few months of just execution without any negative headlines and getting things right. So until I see that, I'm going to say, even though the stock looks incredibly cheap, I'm still going to say it's too risky for investors at this point. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.